Okay, so let us start. We are doing more of practicals today, and we just want to look at how price moves, and also look at how we can look at the indicator, the zigzag indicator, and how that can help us. So we know that price moves in one of three ways. It's either moving up, or it's moving down, or it's moving sideways. Okay, so it's either moving up, making higher highs, higher lows, higher highs, higher lows, higher highs, and it continues like that. Or it's moving down, making lower lows, lower high, lower lows, lower high, lower lows. It continues that way. Or the third option is either it's moving sideways, where it doesn't really have a defined high or a defined low. It's just going in between, it's going in a range. Okay. Now, so when price is moving up, we say it breaks the structure. So just like we have here. So when it starts from a level there, let me make this block. So when it starts from somewhere there and then gets to this level here, the first high, once it moves down and does not break this low here, once it does not break this low here, by the time it then moves up, we're expected to break this previous high, thereby making it a break of structure, right? Break of structure to the highs. Then it continues going till it gets to a certain point, which will now be a higher high compared to the previous high. Okay. Now, it then repeats the same process again. Okay, it's a repetitive process. It then goes from that high, pulls back down again, and then gets to a level. From that level, usually, sometimes some people say it gets to where it broke the structure before. Sometimes it does that. Sometimes it might come a bit deeper. Sometimes it might just be a shallow one, and then it will break that structure again. So it continues like that. Break of structures, higher lows, break of structure, higher lows again, break of structure. So that's for the uptrend. And it does the same thing too for going downwards. So I'm sure we are all familiar with that. So that is fine. Now, at what point do we say that the movement upwards has changed? Okay, so we have this is making higher highs, higher lows, higher highs, higher lows. Okay, by the time it now goes up again, higher highs, higher lows, higher highs. By the time it breaks this previous higher low, by the time it breaks it, it gives us a lower low, and that implies that it has done a break of structure. Please don't mind this chalk here. It's, some people call it change of character. So, but a break of structure is a break of, so anything that breaks the previous high or the previous low is a break, right? So some people call it change of character, but don't mind nomenclature. It doesn't matter too much, right? So we have a break of structure to the downside. And then what you expect is that price will push back up, should not break this other high, and then it should continue downwards. Now, the same thing happens too when you have price going downwards. So it's going lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low. From this low now, it then goes up and breaks this previous lower high. As soon as it breaks that, it gives us an indication that price wants to change direction. Okay, then it changes direction that way. It then moves up, and then you expect it to come down. You don't expect it to break this previous low, because by the time it comes back and breaks this previous low, it has broken structure again to the lower side. That means this one was what we call a fake out. Okay, and there's no way for you to know whether it's going to be a fake out or not. So I know somebody is going to ask whether you know whether it's a fake out or not. So there's no way to know. Okay, so we that's how we take it. Please give me 1 second. Okay. So for us to continue this process and we need to then imbibe, we need to then find out a way. Oh, sorry. We need to find a way to be able to trade this on the charts. Okay. So let's go to the charts and see what we have. Now I've removed the candlesticks. I've just put this indicator called the Zigzag Indicator. Okay, you'll find it on any chart at all. It's available on any chart. Most brokers have it. So so it's let's see, where is it? Somewhere down there. So you see, it's called the Zigzag Indicator, right? And then, so what I've just done is to put my own settings at 453. So let's look at it. The Zigzag Indicator. So I've just put it at 453. Okay. In case you want to use the same settings, you don't have to use the same settings, but just look at what we're looking at here. So in this situation here, price was initially coming from a low to a high, to a lower high, to a higher high, right? Then it gave us, so what do we expect? We expect that price will go down to a higher low. We don't expect it to break this low. We expect it to then go and break this high here. But what did price do? Price just pushed down, gave us a higher low, quite all right, started moving up, but then what did it do? It came and broke this high, this higher low, right? It broke this higher low. That means it's changing direction. There's a potential that it is changing direction. So it then changes direction, goes all the way down. And then once it starts pushing back up, you can then say, okay, my last range is between this high here and this high. And then you just see it, it goes there, it pushes up a bit, and then continues downwards. You expect again, since it broke this last lower low, and then it's giving you a new lower low here, you expect it to then push back up and then do the same thing. So you just see it doing the same thing as we saw in the notes earlier. Price making higher highs, higher lows, higher highs, higher lows. Okay, so what is now left for you to do is to decide, how am I going to trade this? So you need to find out how you're going to trade that. So it's either you can say that, okay, as soon as it breaks the previous low, that's your trigger that is going to go short. Then as soon as that candle then closes, you can then say, okay, I'll enter at the next candle, put my stop loss there, and just follow it like that. Okay, but you will need to do your back testing to see how effective that will be for you. Okay. Now let's look at another pair. Let me look at this is Euro USD. No, not Euro. This is Pound Aussie. Okay, this is Pound Aussie. Let me see. Just a sec. Let's move this one. Okay. So Pound Aussie. This is even the 15 minutes now. You can see how price continues to repeat itself. It continues to repeat that same pattern. Okay, if you start from anywhere, so let's say this is beginning of the day, you start from here, it goes up, it then comes down, it then goes up, right? So let me even bring in the candlestick so you can see how those ones look like. Oh, okay, that's a blank one. Let me bring the zigzag. The other is the same stuff. Where are we? Okay. Or let me do this one first. Let me put the candlestick so you can see how it looks like with the candlesticks. Okay. So this is the candlesticks, right? So once you then get this break here, you can then enter on the next candle. Either you enter on the pullback or however you decide to enter, but you put your stop loss there. Can you see how, without even looking at the candles, once the candles are not there, you can still know what price is doing. You can still detect what price is doing. You can say to yourself that, yes, this is an uptrend or this is a downtrend that is in motion. Okay, so let's go to that 50. That was 1 hour. A 1 hour time frame. Let's look at oh, okay, it seems I've lost my Pound Aussie. Okay, so this is let me look at 4 hours here. This is 4 hour chart of this particular pair. Can you see the same thing overall? So let's say we start from somewhere there. Price did what? It broke a structure there and then went down. So what do you expect when price breaks a structure? What do you expect? You should then say that, okay, price is likely to go down. Okay, and then your range is between this last high here and this low here that it makes. So once it starts going up, you can decide for yourself that, okay, this is my high, this is my low. I can enter a sell anywhere in between here. You can enter your cells anywhere between there. Why? Because price has broken that structure. Okay? Because price has broken the structure right here. So this is you looking at price, even without any candlesticks or anything, just with your zigzag, you can see what is happening. Okay? You can see price here. It gets down here. It then pushes up, pushes down again, then pushes up and breaks this last high. Right? So your major high is between here, your initial major high is between here and here. This was your last lower high that broke this structure down here. Then you're expecting to go low here. You're expecting it to come down and then continue here. But then what does it do? It does a market structure shift. So you take your loss if you are taking a sell here and then got stopped out there, right? You take your loss, but as soon as it breaks this level here, you know that it's doing a market structure shift. Therefore, you can enter your buy there and put your stop loss there. Okay, let's look at how it looks like on when you put the candlesticks. Where is that? Okay, it was here. So let me put the candlesticks. So can you see how it does the thing? So even without candlesticks, you can see what is happening. You can see it. You can see what price is doing. Look at what price has done here. What has it done? It has broken a structure there. So what do you expect? So mind you, this is once it breaks a structure, it tells you that there's a potential that is going to go down. Right? So it's broken this low here now. So you expect that between here and here, these are the levels that you have now as your structure. So as long as price doesn't come back all the way and break this high here, you are good to go for a sell. So mind you, price could actually do that. It could go down here and then go all the way up. Price can do that. So it just gives you, so this business is a business of probabilities. It just tells you that out of, say, 10 times that it will break a structure, say it breaks a structure here, goes down, comes back up, and does that, which is very good. Where else again? Let's say it breaks another structure here, goes up, comes down, does a little bit of that stuff, and eventually goes down, right? So if you look at it generally, it works. But that is why you don't need to trade randomly. Rather, trade in a consistent manner. Just have one process and follow that process. Have one process and follow that process continuously. Okay. Let me see. Does anybody have any pair that you want us to look at? So let's see if this zigzag thing works on it. You can type it in the chat. Let's see. Is there any pair you would like us to look at? Okay. If nobody, I can't see any pair. I can't see any response. Okay, Aussie USD. Okay, let's look for Aussie USD. Where's Aussie USD? Aussie USD. Aussie prices at the top here. Oh, let's see. Okay. Can you see my charts now? Okay. All right, good. So price is at the top here. Let me even do this. Let's see, where is the, okay, so that we can see it better. Okay, so price is at the top here, but before getting here, what has price been doing? Can you see, even without seeing candles, you can see this is the lowest level here from the thing we can see here, and we can see that price is going up. It initially, so between here, this was the initial level, and this was so this is your initial range. Okay, so you're expecting to go up and then come back down. But what did price do? Price did came up to this level, started coming down, but got stopped out, it halted there, right? And then moved up again, but it still didn't break this one. It went down, which is good, right? But then it came and broke this level. So as soon as it breaks that level, you then change your direction. So if you're in a sell here, you can either say, okay, I'm going to close my cells, or I'll leave my sell with my stop loss there and just allow it to get, to stop me out. However, once I see this, then it tells me that there's a potential is going to go up, right? You then go up with it. It comes back, goes up, comes down, goes up, comes down, goes up. Can you see it's making higher highs, higher lows, higher highs, higher lows? Okay, right now it has given you a high, and then it has given you a potential higher low there. However, it's struggling here, it's struggling. So what we expect, once it gives us a higher low, what we expect is that it should go higher, right? But then if we come back down and break this low, that means it's beginning to change direction. Okay? So this is even on the 1 hour chart. You can see it yourself that this is what price is doing. So let's put the candlesticks and see what it's doing. So when you put the candlesticks, can you see how price is pushed down? Wow, okay, this must be news, right? It then pushed back up, came back down, you see, like that. So you don't need any magic formula anywhere. With your own eyes and with the tools that are readily available on almost every broker. In fact, I don't know any broker that doesn't have Zigzag on it. Every broker has Zigzag. That Zigzag indicator, right? And you can use it, but use it to your own advantage. All right. Yes, question. Go ahead, please.
Good evening, sir. I just wanted to know, how do you hide the candles? How do we do this? I know you
All
have,
right.
obviously, yeah.
The candles, right? Okay, so at the top here,
Yeah.
You have bar charts. So let me see if you can see it now. I don't think you can see it yet.
No, I actually know that one where you have bar chart,
Okay.
candle, and you have line. But I didn't know you could actually physically hide the candles.
All right. Okay. So what I did, okay. So what I did was so my background color is gray.
Okay.
Okay. So all I did was to go into properties. So what I did on this MT4 platform, I went to properties.
Yeah.
And then from properties, I then just grade it all out. So let me bring out that template that I did black. Okay, that one was so let's do that again. Go to properties.
Okay. So the candles are there, but they're the same color as the background.
Yeah, so that it's same color as background. So
That's so clever.
so that yeah.
So clever. Honestly, I'm thinking, how did he do that? I've never been able to do that. But this is just awesome. I mean, for me, you're just like opening my eyes. This is I can't believe it's caused so much stress. You're really opening my eyes. Well done,
Yeah.
sir. Doing a good job.
Indeed. Thank you.
Thank you. Thank you.
Thank you. You're welcome. Right. Do we have any other questions? I know there are some gold traders here. So for those who like to trade gold, let me see. Let's even go to okay. No, let's go to which time frame should we go to now? This look at gold has been a massive, just going higher highs, higher lows, higher highs, higher lows. Can you see it very nicely? Higher highs, higher lows, higher highs, higher lows. It's just so if you are trading this, you just put your zigzag, you should know which direction market is going, right? So let's go to I like trading the lower time frame, the 15 minutes. Okay, so you can see from last week it was at this level, it broke it right there. Okay, then it pulled back and then came all the way down. Now it then pulled back up, and then once it was coming back down, beginning of this week, that's today, what did it do? It did not break this low, but rather went to break this high. So that tells us that it's likely to go up, right? So mind you, this is the 15 minutes chart. So you can get a break of structure in both directions, okay? And that is what we had here. So price then went up, came down, went up again, and then broke structure again there. Okay, to the downside. So if you had entered here, you'll have gotten some profits there. By the time this one then happens, maybe if you put your stop loss somewhere there, by the time it comes up, so your sales trade is still intact. Okay, you may have decided that okay, this is a break here, so you may be in a hedge trade right now. Okay, but when we put the, let's look at what the candlesticks looks like. Let me put those things now. Okay, so you can even see it for yourself that price is rejecting this level here. It doesn't want to go down. It wants to go up. Okay, but at the same time, so you can see what we call a range here. Okay, so it's come down, went back up, but did not take this high out. Then it came back down and just pinged it out a little bit and then came back up. And what did it do? Just gave you maybe a double top there and then came back down again. So it's struggling around here. All right, but this is the lower time frame, right? If we go to a higher time frame, for instance, we can get better view of what is happening. Okay, so this is the 4-hour chart. What do you see on this 4-hour chart? Okay, let me even remove this zigzag. Let's remove this zigzag so you can see it very well. One of my favorite setups as at Friday, look at this nice bearish engulfing candle that tells you, oh, price is likely to go down. And then it goes down. Look at here, before this nice bearish engulfing candle, look at this nice bullish engulfing candle, right? And what did price do? It then went up. So price has come down. So today, what has it done? It gave us this bullish candle, right? Then gave us this spinning top or doji, okay? Gave us a small engulfing candle, but the next candle is a very small, is this what maybe is a kangaroo tail, or I call it hanging man, right? Okay, and after it tells me that the sellers are actually in the market. Okay, so in fact, this one just moves us nicely to the other thing I wanted to do, is to do what we call just market outlook, just to look at some pairs and do a market outlook. So because today is beginning of the week, so we're on gold now. So let's even just start with gold. Okay. So we'll do, or before I go into that, do we have any other questions? Is it clear on how we are using our zigzag? So it's for you to just go back and practice. Just put the zigzag on and practice. Just look at it and test it out. Okay, yes, please go ahead. Oh, let me unmute you. Ask you on mute.
Okay, sir. Thank you so much,
good
sir.
evening.
Good evening, sir. Hey, sorry, the question just escaped me now. Okay, I will ask again. Sorry.
Okay. And when you remember, so just put your hands up again. Okay. So let's start with gold and just do an outlook to just see what is going to happen next week. So all we're doing is just to look at possibilities of what could happen. Okay, you remember now. All right. Okay, please unmute and let's hear your question.
Okay, thank you, sir. So my question is the zigzag, the values that you put, the 453. I want to ask what's informed 453 and what's the implication of putting that value?
It's just a random number. So what I did actually was to look at my price action. So let's put it back on. So let me put it back on here. Okay, let's use this one. So if I bring this up and do the where is it? It's not coming up. Okay, let's do it this way then. So if I check if I press default, okay, on that 453, when I press default, so the default gives me 1253. Okay, if I put okay there, let's see what it does. Can you see the change? Let me bring another one up. So Let me bring my own default, okay. Let's do 453 there, and then I'll give it a different color. Let me give it color red. Okay. So I've put a second one there. So the first one, so there are two of them there. Oh, okay. Let me make it brighter. So the first one, look, let's remove this. It's too red. So this first one is the 1253. That's the default one. That's the one that comes with the broker's indicator.
Okay.
Okay. And it just gives you the turning points. But for me, I think the 453 helps me capture the turning points a bit faster. So for instance, in this zone here, given that I'm trading the lower time frame, okay. So for me, when price came up here, came down and went up, by the time it broke this level, that's a break of structure for me. Okay. But according to this zigzag now, it's not yet a break of structure, and then you're looking for price to eventually go up. Okay. So because I'm trading the lower time frame, I feel it's better for me to have one that is a bit more sensitive to those turning points. And then I just played around with the numbers, and I saw that 453 worked very nicely. In fact, I think is the lowest number I can go is 321. Okay, but that one is just too fast for my liking. You'll be in a ranging market, for instance. You just be buying, you be selling, buying and selling and buying and selling. It will be too fast. Okay. So there are different numbers you can use. The thing is for you to then decide which one is best for you. So that's why I said you need to do a back test and see what is suitable for you. But I have found that 453 is my sweet spot.
Okay, thank you, sir.
Thank you. All right, so let's look at gold. Where is gold? Yes, this is gold. So let's look at let's quickly do a weekly analysis. So weekly analysis, last week, price gave us this high here. And then, let me see. Okay, it gave us that high and then gave us this low. Okay, so that's the box that we're trading in. So we're expecting that. So according to this weekly chart, price has been going all the way up. So perhaps we're expecting some more bullishness. Okay, so that's on the weekly chart. Let's go to the daily. Now, on the daily chart, we can see the range that we're in. However, we're seeing some nice candles here. I can see a nice bearish engulfing candle here that happened on Friday. And then for me, once I see a nice bearish engulfing candle, particularly at a high like this, then it tells me that price is likely, it has a potential to go down. Okay. So all I'll then look for is to go to my 4-hour chart and say that, okay, price, given that price has done that, and I can see that price is currently struggling in this particular zone that it's in now, my first take profit, if I'm entering a sell, will be the previous low. Okay, that previous low right here. So that will be my first take profit, and then the next take profit will be the weekly low. So this will be the weekly low at the where we just marked earlier. So if price is going to go down, these are my two target levels. Okay. However, if price is then going to go up, then I'll be targeting the weekly high. But at the moment, it's showing me signs that it's likely to go down first on this particular pair. Okay. So let's look at another one. What is this? This is USD JPY. Yes, please.
Sorry, I think I should be asking them before as it's hot. Okay.
Okay.
So based on the last one you showed us, that the US now, US USD.
For gold.
Yes. So based on your
Okay.
analysis that it shows it's going to go down, but if in case it becomes bullish, is it ideal then for one to use buy stop and or buy limits or sell just
And that
to
is where you need your trading plan. You need to know what are your trigger candles. Remember, I said the trigger candle for me is this daily chart bearish candle. This is my trigger candle, this one here. This bearish engulfing candle on the daily chart.
Okay.
Okay. That is my trigger candle, the bearish engulfing candle.
Okay.
Okay. So I then go to the 4 hours and I say, okay, I am bearish. And then I look for any opportunity that I see any bearishness. In fact, this first doji candle here, the spinning top, is one that gives me an idea that it's likely to be turning here. Okay. And even just to, let me see, just to even fulfill all righteousness, if you put in a fib of this thing here, it came almost to the 50% level. Let me see, where's my fib? Okay. You see, so it reached almost the 50% level, but it hit the 38.2 level. Okay, so those are various confluences that we don't need for this particular class, but those are confluences that you can use to know what you want to do. But however, I'm also conscious that on the weekly charts, the thing is very, very bullish. So I've said to myself that if it then a lot of resistance, if it breaks that level where it is finding resistance now, then I'll know that it wants to go bullish. Okay, so my sell entries will be stopped out, and then I'll now probably go to you remember I said I trade on 15 minutes, so I then go to my 15 minutes chart and then look for the same thing, the same zigzag thing that we always look for. So where is it now? So currently is down here. So if it breaks these zones here and breaks it to the top side, then I'll just wait for a pullback. I'll wait for a pullback from that resistance level there, and then look for it to begin to go up. Okay, so that's my simple trade plan. So at the moment I am bearish. However, I've said if it breaks this level, so I've marked out my level. So I say if it breaks this level, then I'm no longer interested in the sells. Why? Because about 10 minutes more. Okay, so let's see. Or do we have any particular pair we want to look at? Would we like to analyze any particular pair? Okay, yes, please go on. All right, you're not let me ask you on mute again.
BTC USD.
Billionaire Shola, we can't hear
Yes.
you.
So I said BTC USD.
Sorry, which pair? I think my network is going back and forth. Euro USD, did you? Oh, BTC. Okay. Right. Crypto, BTC. Okay. Let's put our zigzag there. So if let's look at the daily first. In fact, we can even, we don't necessarily need to go all the way to weekly, but just for sake of analysis. So when you're trading, you don't need to go all the way to weekly. Let's mark our highs and lows. So I'll just mark the high. Where is last? Oh, last week's candle was very small. Okay. That's last week weekly candle. That was very small. It's a small candle. Okay. So we're expecting a breakout of some sort. Okay, so I come to the daily chart. I can see that price is finding it hard to continue going up and it's coming back down now. And that could mean that it wants to break these current support levels that we have. This 93 level, 93,900 or 93,988. It wants to break that level. And if it breaks that level, it will likely come all the way down to the next one there, 91,500. Let's just say 91,500. Okay, if it breaks that level. And if we go to the 4-hour chart, we can see that we're very bearish at the moment. Very bearish. Okay. And then, so the only time we'll be bullish is when we get, so on this 4-hour chart, for instance, so one of the things I do is that now that it's very bearish, the only time I will be bullish will be when we break the last bearish candle. Okay, so if price then decides to come all the way up and break this bearish, this last bearish candle, then I'll think to myself that, okay, there is some bullishness coming into the market. Okay, so I'll then say, okay, maybe it's likely to target the previous weekly high. All right, but if you want to get more of that one, that will be for those in the mentorship program or in the coaching program. We'll go into very detailed directions there with valid ranges and all that. All right, but for you, just know that once if you are currently bearish, the time you will know that this thing has changed, or if in fact you can even just use just this zigzag that we've been using since. Right, and wait for it to just break that last level. Or if you go to the 30 minutes chart, let's see, where's the 30 minutes chart? Okay, and you just wait for it to break the last level. Just wait for it to break it, and then you take your trade in the other direction. Okay, so it's very trading can be very simple, but as long as you have a trade plan that this is what I'm going to do, you say, if this happens, then I will do this. So you have an if-then process. If this happens, then I will do this. If this other thing happens, then I'll do this. So you have it written down already, so that when it then happens, you know what to do. So you are not right. I have time for just one more question before we shut down. Oh, Bilana Shola, is she asking a question? Or is it the last one? Was it from the last time you were asking questions?
Sorry,
now?
it was the last one. Sorry, I forgot to pull out.
Okay. Okay. That's fine. Okay, so I hope this has been want to use this and it's freely available on any of your trading platforms, and you can then just do your back test and then carve out a trade plan that you can use on with this or any other trading system that you want to use. Okay, beautiful. So have a very good evening, and then we'll see again next week.
Thank you. Thanks so much.
Thank you. You're welcome.